In the past 6 months, Sofi stock has completely taken off, with the stock being up about 125%. This has many investors wondering, should I buy, should I sell, and is this likely to continue? In this video, I'm going to provide you with the risk that you should avoid for this particular stock, the bull case, as well as my price prediction moving forward. So let's start with the company's bull case. One of the main things that it's amazing about this particular company is the market in which the company operates. So this would be the fintech market. And the reason why is because the company developed a whole bunch of solutions in this particular market. And as you can see, it is extremely lucrative and a market that is not only going to be available right now, but that is expected a lot of growth. In this case, we have an expected 17.5% compounded annual growth rate, and you can see what this looks like in terms of a potential graph. Now, I do think that the actual numbers listed here are a little bit undervalued. The actual market size, I think, for Sofi and all the products that the company offers is a lot higher. The other thing that's particularly powerful about the company is the large number of users of the company's products. So the company calls these people members, and these are people that have interacted with the company and use any one of the company's products. So as you can see, at this particular date in December 17, they reach over 10 million members, which is an amazing number. And due to how many products the company offers, each of these members can be upsold or simply integrated into a new line of products so that the company is able to generate additional revenue without that much work. And if you're wondering, the company is super diversified with so many different products. So as you can see, they have loans for students and a whole bunch of other different types of loans. They also have private loans as well here. And as you can see, the company is super diversified with a whole bunch of different products, all in the financial space. So you can see they have loans. They also have a series of investment products, banking services, insurance, financial insights, credit cards, and more. Now, before we move on to the negative aspects, we have to talk about the last positive aspect for the company. And this is the fact that the company has been able to grow its revenues consistently. So as you can see right now, this is the revenue growth that we're seeing for the company in the last few years. And most importantly, in the last year, the company has now been able to be profitable, which is a big achievement for a company that's grown really fast but burned a lot of money in the past. And by the way, if you want to get the financials for any company like Sofi, you can use the Y-Sheets add-on, that is plugin that you can install on your Google Sheets or Excel spreadsheet. You can simply type in the name of the company, click on get annual or quarterly data, and then after that you will be able to get all of the company's financials, which is what I did to be able to analyze the company top to bottom. Now, in terms of concerns, one of the big ones is, although the company claims that they're able to offer all of the bank services that one person needs to be the one and only platform that they use, the reality is that based on a lot of reviews on Reddit and so many other sites, we can see that Sofi members, they can use a lot of services directly from the company, but generally they still need another bank. And this is because the company does not have a lot of ATMs. And also people are looking for a simple way to deposit cash. And then what people end up doing is they have another bank, they deposit the cash there, and then they make that transfer to their Sofi accounts where they interact with the company in many different ways. So in my opinion, it's not a complete replacement to all of the different products and services that you get from another bank. Now, moving on to the price prediction and valuation for this particular company, taking all of the different factors that we talked about in mind, you can see here my assumptions. So I have revenue growth of 16%. This is very much in line with what other analysts are expecting, except just a little bit more conservative. And then I have a key assumption right here, and this is the terminal price to sales ratio. I decided to value the company not based on profit, but on sales, because the company does really optimize for revenue growth, and the company has not been profitable for a long time. And this valuation model is using Y-Sheets formula. So in this case, it gets the revenue TTM basis, and then it projects the numbers into the future. I'm also using a 13% discount rate. This is because the company does have quite a bit of risk, so you want to make sure that you get a good return for this. And in my price prediction model, I estimate that the company is worth around $8 per share. Currently, as you can see, I have this formula that provides the real-time value of the company. So the price right now is 14.75, which represents an upside downside percentage of negative 43%. So therefore, at this particular moment, I would not recommend buying the stock. However, if you already have it in your portfolio, it's actually not a bad idea to hold it because I think there's going to be some good growth into the future. But one of the things that's going to really matter is the following. One of those factors is going to be interest rates because the company generates quite a bit of its revenue from loans. So the lower the interest rates are, the more favorable of terms the company can get to be able to loan to other people and then those people being able to pay the loans back. As you can see, it is estimated that the Fed will lower the rates a little bit into the future. Now, we don't know if it's actually going to happen, but this is just speculation. And if this does happen, this makes it so that the company has a better environment to operate in. On the other hand, if the rates do increase, then the value of the company is likely to decrease. So it's something to keep in mind. And the last thing, of course, is going to come down to the execution of the company. However, I do think that the company has a great management team, particularly the company's CEO, who comes from a military background, and then on top of that has an MBA at Wharton and has done really good things in other positions that he had before becoming the CEO of the company. So it is possible that the company can perhaps grow faster, maybe at like 18% revenue growth, and then because of that reason, then the multiple goes to like 4 or 3.5, and then at this point we're looking at a value that's a little bit more aligned with the current stock price. If you've enjoyed this video, make sure to subscribe to the channel. Let me know in the comments what you're doing about Sofi stock, and I'll see you in the next one.